A lot of cryptocurrencies have their own hero. For example, Bitcoin, everybody knows about Michael Saylor. Or for Dogecoin, it is Elon Musk. Now for SPX6900, we've got one of the meme coin whales, Murat. Murat thinks that SPX6900 can become one of the most successful meme coins because it's trying to flip the S&P 500 in market cap. Will this ever happen? Nobody knows. But what we are trying to find out in this video is whether or not it still makes sense to buy SPX6900 after this recent rally. Because we are now at 77 cents. We are up 7% today and almost 50% this week. Now, this is not the first video on SPX6900 on this channel. I've published several videos already. And the very first video, it came out 228 days ago. It didn't really perform that well. It just performed like the average video. However, the recent videos tend to perform a bit better. Now, the first video was published when the price was still at 11 cents. And this is in the end all what crypto is about, right? It's trying to be early. Because subsequently, the price went above $1.50. Then came the retracement in Bitcoin that had a massive effect on SPX6900 as well. And now we are coming back up. The question is, are we going to hit the $1.50, potentially even $2 again? Now, in order to answer those kinds of questions, I always like to look at relative valuation charts. Because the reason we get into an altcoin is to get more performance than just by being in Bitcoin or just by being in Ethereum. And SPX6900 launched on Ethereum. So now it's also on Solana, but it launched on Ethereum. And so let's have a look at the relative performance. That's this chart. It's SPX6900 relative to Ethereum. And the price is going up and down in massive waves. Now we tend to be rather on the higher end of the trend. But let's have a look at the on-chain metrics. There are three versions of the token. There is a token on Ethereum with 39,000 holders. There's another version on the base chain with 76,000 holders. And there's the version on Solana with 51,000 holders. So it seems like all of those tokens are somewhat equally important. But actually, when we look a bit deeper, that's not true. Here's the number of retail investors, medium-sized investors, and whale investors over time on the Ethereum chain. And the way we make this distinction is by looking at minimum holding thresholds. So to be counted for the wallet on the left, that wallet has to hold at least 1,000 SPX6900 tokens. So at the current price, that's $773. To be counted for the chart in the middle, it's a 10x in holding, so it's 10,000 tokens. To be counted for the chart on the right, it's 100,000 tokens. Now we can see how the whales bought in very, very early and then didn't really accumulate that much. We see how the secondary rally in September, October of last year was mainly driven by retail. The whales also bought a bit, but they didn't buy as much, comparatively speaking, to what the small retail investor bought. The most important thing, though, is this chart on the right, because again, those kind of wallets hold 100 times the amount that the small wallets hold. So 700 wallets on the right would be equal to 70,000 wallets on the left. And there are, of course, no 70,000 wallets on the left. So it's really the whales that dominate the price action. But again, remember the 700 wallets on Ethereum. Here are the same kind of holding thresholds, but that's now on the base chain. On the base chain, we've got only 33 whales. So it's only 5% of what we see on Ethereum. Even though the number of holders on base is almost double compared to the number of holders on Ethereum, the really large capital is not on base. It's all on Ethereum. But let's compare this now with Solana, where we've got 51,000 holders. How many whales are there? The answer is 170. So again, the vast majority of capital is on Ethereum. But here's also what we can see from those charts. It doesn't look like the number of whales is increasing. So that's true for Solana, it's true for the base chain, and it's also true for Ethereum. So how is it possible that the price in this week went up by 50%? I think it has a lot to do with Ethereum going up 38%, because again, most of the capital of SPX6900 is on the Ethereum chain, and there is a direct coupling here. SPX6900 is in a liquidity pool with wrapped Ethereum. So the price of SPX6900 actually does not get determined in US dollars. It gets determined by the ratio of wrapped Ethereum to SPX6900 in that liquidity pool. So when wrapped Ethereum goes up by 10 or 20%, automatically, even without a single transaction ever having taken place, SPX6900 grows to the same degree. So the vast majority of those gains are just Ethereum going up. It is not the big money coming in. Still, there was a bit of outperformance in the meme coin, right? It still did a bit better than Ethereum. And what's the reason for that? I believe parts of it can be attributed to the perpetual futures. So that's the short-term capital, that's the levered bets on the price. If enough people bet on rising prices on the perpetual futures, arbitrage bots are going to buy the token on the spot market as well. Now what we see over here is the funding rate of the perpetual futures on SPX6900 over time. When the shorts are willing to pay a lot to bet on falling prices, the price tends to go down, unless of course we see a short squeeze. It seems like a short squeeze wasn't profitable at the time. The market makers did not manipulate the price up. Instead, we just deflated. Now, recently, we tend to see a positive funding rate. So there's no majority on the perpetual futures that bet on falling prices here, rather the opposite. And so when we see that open interest is going up, as in the quantity, the amount of bets on the price is going up, then the spot price tends to follow, right? There is some correlation here. When there's less bets on the price, spot tends to go down. When there's more bets on the price, spot tends to go up. And so again, even though we had this nice rally in SPX6900, we did not see any liquidation. So there's no short squeeze going on. It's just some additional leverage happening on the perps. But again, the majority of this rally can just be attributed to Ethereum going up and a lot of the capital of SPX6900 being bound to the ETH price. There was only 12 percentage points alpha over just holding Ethereum. And the relative valuation chart to ETH isn't really that promising. Yes, we might see another 14% outperformance, maybe in the best case 33%. But are we going to see the $1.50 again anytime soon? Probably not, unless of course Ethereum doubles as well during the same time. Now in October of 2023, the market flipped. The market turned from bear to bull. The market saw inflows from traditional finance. And we can see this in this chart. This is the stablecoin market cap. So it shows how many dollars in the fiat system are deposited somewhere with a custodian, say with Tether or with Circle, and what equivalent has been minted as stablecoins on chain. And from May of 2022 to October of 2023, we actually saw a contraction of the market. So money was flowing out of crypto. People were turning back to TradFi. People were withdrawing their money. But that then changed in October of 2023. Since then, we see more people depositing than withdrawing from the crypto ecosystem. And surprise, surprise, this is of course also an impact on crypto prices. When money is flowing in, crypto prices tend to go up. And that is what we see with this chart at the bottom. This is the Bitcoin price. So when money comes into the market, Bitcoin goes up, and that is with a leverage effect. So Bitcoin appreciated by 260% since the beginning of October, while the stablecoin market cap went up by only 85%. Now still, there is a lot of volatility. What causes a price drop like this of 26% while there's actually money flowing into the system? The answer is swapping activity. So it's not just people depositing their money into the system and then wait and invest for the long term. Most people in crypto trade actively. And whenever people move from stablecoins to risk-on assets like Bitcoin or altcoins, the prices go up and vice versa. So there's money flowing in and out, and there is swapping activity, people getting risk on and risk off. Now we can use that data because we can have a look at how much of the entire cryptocurrency market cap is currently in stablecoins. When most people have swapped into stablecoins, the stablecoin dominance, so the percent of all of crypto that's in stablecoins, that's pretty high. When a lot of people have deployed their stablecoins, then the stablecoin dominance is low and the crypto prices are high. So check this out. This is the stablecoin dominance, and this is much more volatile than the stablecoin market cap. And at the peak, 19% of all of cryptocurrency's market cap was just stablecoins. So that's when people are very much risk off. And that's then also when the Bitcoin price tends to be low. As stablecoins get deployed into risk-on assets again, the Bitcoin price tends to go up. Now in the last 1.5 years, we tended to trade in a range. So that's between 9% stablecoin dominance to 5% stablecoin dominance. And if this is now coming back down again, as we have seen in the last few days, then crypto prices will go up. Let's work with the assumption that we see the exact same development of people deploying their stablecoins again as we saw in November of 2024. So let's overlay this. If we take this time frame and we look at the Bitcoin price development during that time, then we can overlay this to the price today, and we're getting to a potential upside of somewhere between $130 to maybe even $150,000 per BTC. And so this is, I think, the most likely scenario. I think most people have this backwards. There are too many comparisons made with traditional finance and the crypto ecosystem, as in when the money supply is going up or when the Federal Reserve is lowering interest rates, that's when money is loose and that's when crypto prices should go up. But I don't think the link is that strong. I think the link is much stronger for how much money is currently on the sidelines already within crypto. We know that the crypto ecosystem as a whole is expanding, right? The stablecoin market cap is going up, and that obviously matters. And at the same time, we also see that a lot of that stablecoin money is not yet deployed, but is ready to get deployed. And so if we work with that scenario, if we say, okay, a lot of that money might get deployed if times get a bit brighter, should we just go now and buy all kinds of random altcoins? I am not so sure, because here's the counter story to all of this. The Bitcoin dominance continues to go up. So as a fraction of all of crypto, Bitcoin becomes more and more important. Bitcoin tends to outperform most other assets. And we only saw an altcoin rally when Bitcoin dominance was close to 70%. So when only 30% of the cryptocurrency market cap was in the alts, that's when the alts were cheap enough to subsequently make a rally. And we are not yet there. So just building a portfolio of altcoins is probably not going to cut it just yet. Here is what I'm doing instead. I'm looking at what are other influencers and other heavyweights buying. So we track various important wallets and we see, for example, how the Pepecoin team or the Base AI team is accumulating the KEK token. And that's happening at a very small market cap, only 3.2 million. We got notifications for all of those purchases, and though the price just continues rising, we still need an edge in this market. We can't just buy any random altcoin, but the market is expanding. It does make sense to take some risk on bets now. Now, since crypto cannot create money out of thin air, it's still a player versus player game. And so if you follow the insiders, if you follow the people that traded well in the past, we have an edge. For example, over here, we've got 33 wallets that we track by the Crypto Banter group. They've got 1.16 million subscribers on YouTube. Or we are tracking 12 wallets by Alex Becker. He's got 1.6 million subscribers. Or check this out, Brian Young. We have 5 of his wallets and he's got 2 million subscribers. So there are two components to this. First, those influencers tend to get information relatively fast. They tend to beat the market. But secondly, they might also have an impact on the market. So when somebody with 2 million subscribers talks about a small cap cryptocurrency, of course, some of the followers will buy the token, which then pushes up the price. And so with all of those wallets that we are tracking, we get various signals. Who's buying and selling what at what point in time. And while it's nice that the market is expanding, it's still a winner takes most market. So returns are very much concentrated in just a few assets. There are mostly losers in this market and a few winners that take it all. Just have a look at the top 100 cryptocurrencies in the last year, right? There are some tokens that perform phenomenally and a lot of them that are just losing. So just diversifying does make sense. If you just build a portfolio of many different altcoins and we don't trade actively, then we are underperforming Bitcoin because Bitcoin dominance continues to rise. Instead, what we need to do is we need to find ways to buy things such as virtual very early. And this is where we come back to Brian Young. We got a signal of Brian Young buying into the virtual token, and that was at 7 cents. So that was on the 21st of March of last year. Our community got excited and bought in. And of course, the rest is history, right? Now we are at $1.75. And so this is my strategy in this market. The market is expanding, people are making profit, but still returns are concentrated in a few winners. And we have to have a way to identify those winners. And we don't have to be the best at this, right? We just need to know who are the best, and we have to find their wallets. And of course, this is not public information. And so we have to do on-chain analytics to find the wallets. And so of course there is the influencer trade channel with all of those signals, but there's also a tutorial course on how to find different wallets. So we use related trades, we use official NFT transactions, we try to figure out ways through deposit addresses on centralized exchanges, etc. to get new wallets that we then actively track with this automated bot in the channel. And since the community is learning how to find new wallets, we also have a dedicated wallet research channel. So this is then where our 500 members look for new signs for influencer wallets. And once the moderators have confirmed those wallets, they get added to our tracking. For example, here, right, we've got Crypto Gains that suddenly out of nowhere was talking about the Champ token. And of course, we knew about this because we saw the purchase alerts before in our tracking. And so by tracking the insider wallets, we become insiders as well. Not of course in the legal sense, because all of the data on the blockchain is 100% official and transparent, but we do have an edge over other market participants because most people don't go through all of that effort. And so it's not necessarily just about buying one asset and finding the winner and holding it long term like virtual. It's also about shorter term trades. And so the community, of course, shares the winning trades as well over here. Just have a look. If you add some leverage to the game, you can make quite nice gains in a short period of time as well. So feel free to check it out. It's currently $125 per month. If your crypto portfolio is not just $500, but rather 5,000, then it's probably going to be worth it for you, especially in this current market. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.